Hey guys, in this video, I want to talk to you about a 123% gainer, the fourth largest movie theater circuit in the United States, MCS Corp. And if you're in my Discord, you know that about 4 months ago, I took a chance and invested in this company June of 2024 at $11.55. That position is now up almost 83%, making it my best performer of this quarter. In this video, I just want to give you a brief overview of their Q3 results since this is the first quarter that I rode with MCS Corp. They have 79 movie theaters in 17 states, 981 screens, and to make them a little bit different, they also own hotels. They manage 9 hotels, resorts, and other properties, as well as 7 wholly owned or majority owned properties in the states of Wisconsin, Illinois, and Nebraska. Wisconsin was what kind of brought me to MCS Corp, with the Republican National Convention being held in Milwaukee back in July. I went ahead and took a chance with this company, making an investment in them, and it has been a phenomenal performer for this quarter. Let's talk now about MCS Corp, their results for the quarter, and what the CEO is saying about the movie industry going forward. Again, because there is so much negativity out there still on social media about this industry, I want to begin this video with a couple of words that the CEO said in the analyst call a couple days ago. The CEO says, "This is the first quarter that our theater division and the total company has exceeded pre-pandemic revenue and profitability, marking a major milestone in the extended industry recovery." Again, guys, if you're listening to people that are telling you that this industry is dead, that the companies are going bankrupt, pay attention to what these CEOs are saying. Pay attention to the revenues and the profits. Things look to only be getting better from here. I did my research on this company before I bought into it in June of 2024, and I'm going to talk about what I mean by taking a chance in just a second. But as you can see from their quarterly revenue chart and what the CEO just said, the revenues are now back above pre-pandemic level for MCS Corp. I knew going into the investment in June that MCS had just come off of 3 negative quarters, but I also know what the box office was in the profitable quarters back in 2023, Q2 and Q3, and I know because I follow the movie industry that Q3 and likely Q4 of this year we're going to be at similar levels. So while it was at a low on the chart, I took a chance that they would post some favorable and profitable results for Q3, and indeed they did. To recap a couple of highlights from Q3, total revenues for the company, $232 million, an 11% increase from the same period last year. Operating income came in at a record $32.8 million, a 56% increase compared to the same period last year. Net earnings, a record $23 million for the third quarter of this year, a 90% increase from the same period last year. Net earnings per share, 73 cents, a 128% increase from the same period last year. And adjusted EBITDA, another record, $52.3 million for the third quarter. Again, guys, I just want you to reflect on the fact that the box office as a whole domestically is not even close to where we were pre-pandemic, and you see company after company after company posting record revenues and profits, and you want to tell me that this industry is dead? What is the agenda that these people are pushing out there on social media against these movie companies? Explain it to me. Somebody. We're seeing these companies post record revenues and profits, and if you're betting against movie exhibitor companies in 2025 and 2026, when the box office is going to be even bigger, you are going to be in for a big surprise. Management demonstrated their belief in not only their company's strength, but the future of the industry, repurchasing shares during the third quarter at an average price of $13.99, spending $9.7 million of their cash to repurchase 693,000 shares. In addition to that, the Marcus Corp pays a dividend. The company ended Q3 with $28 million in cash on the balance sheet, total available liquidity, including a revolving credit facility of $248 million. Other major changes that happened during Q3 is they retired their convertible debt and they restructured some of the remaining debt on their balance sheet to give themselves a lot of breathing room into the expected recovery of the industry. $100 million private placement in Q3, with those notes coming due in 2031 and 2034. The company's long-term debt table, including those new notes that have maturities in 2031 and 2034, looks like this here on the screen. Long-term total debt, a total of $162 million. That gives the company a net leverage or net debt to adjusted EBITDA of 1.67x. Closing out this video, looking at the dashboard, which is my red, yellow, green visualization for you of the risks of investing in a company like Marcus Corp. You can see there is a lot of green here. I'd like to see a little more cash on the balance sheet. That is what is putting the current ratio below 1.0, giving us a red square there. The revenue growth rate is yellow because we had those very slow first 2 quarters of 2024. And I expect that in the coming 12 months, or the coming quarters even, that this box is going to turn green. This dashboard just gives you guys a starting point. Always do your own due diligence, and for any company that you're looking at investing in, make sure you're looking at these things before you hit that buy button. With the huge run up in price over the past 3 months, Marcus Corp is reaching what analysts consider a fair value. The highest price target we have from any analyst right now over the next 12 months for MCS is $24. Although revenue and earnings are expected to grow over the next 2 years, you do need to pay careful attention to this one because at the moment it does have a very high forward PE ratio relative to its peers in the industry. Over the next couple days, I have a little bit of work of my own to do to decide what I'm going to do with the position that I have in MCS. Should I take some of the profits off the table, or do I think that the company can grow those revenue and earnings enough to continue to watch that share price appreciate? Once I get that work done, I will provide you guys some sort of update about what I decide to do with this position. No matter what company you are investing in this sector, if you're investing in it, with Marcus Corp being the 4th largest in the United States, I hope that you found this information useful. I hope that you listen to all of the CEOs in the industry as you decide what you might do with your investments in this sector over the next couple years. If you have any questions or comments, drop them down below for me. I'd love to hear from you guys. Thank you for watching all the way through. I am Tony Denaro, and I will see ya on the next video.